Avinash Gorakshakar is here to help us understand the mood of investors on the Lal Street this morning, as well as the foreign investors which seem to be escaping India and preferring Asian peers as compared to Indian equities at the moment. Avinash, good morning. Pleasure having you back here with us on News 9. Help us decode what you see on the charts this morning. First up, let's begin with why investors seem to be a little more positive on rest of Asia rather than India. Is it just US tariffs and no trade deal yet, 50% tariffs, or is there something more to it?
Yeah, good morning, Karthik. I think my sense is, the markets suffered a lot of, volatility yesterday because of the derivative expiry.
Yeah.
And today morning markets have opened positive largely because yesterday US markets were up quite significantly. I think now there are strong indications of a rate cut expected very soon. And I think that definitely is a very big booster shot in the near term. See, in India, I think clearly the trade deal and the FI flows are two, data points which have not yet, gone positively with the Indian markets. But I think, probably by the end of this month or early next month, we could see some kind of solution on the trade deal. But I think what the Indian market is suffering clearly on the domestic side is, a large amount of liquidity is coming from primary market supply of paper. And I think this is going to continue. We have been hearing now reports that companies like Misho, companies like most of the larger kind of mainboard companies are expected to make a bigger splash in the month of December. So I think net, that puts a lot of pressure on the secondary market. One good positive part is that, quarterly numbers, the Q2 numbers have come out much better than what the street expected. And I think we have seen sectors like cement, auto components, hospitals, hospitality doing pretty well. Even FMCG has shown some uptick, but I think the real uptick and the real growth could possibly be visible in Q3 ending December. And I think that could be a near-term trigger point, from the first or second week of January. So we are pretty hopeful that the market would consolidate. In fact, today you could see a good bounce on the Nifty, considering the buoyancy we saw in the Dow last night. But I think we need to see that follow-up action coming up in the second half of the session today. So we are keeping our fingers crossed. But Karthik, I think more than the index, I think it is a broader market which I think investors should now focus on.
All right. And what are the levels that you're tracking on the Nifty 50 to really be able to tell us with some degree of certainty that we are in a sort of recovery phase and we are in the so-called bull run? Would 26,200 be a good level that you would be tracking today?
Yeah, I think, see, basically 26,200 is just a number, Karthik, but my sense is that as long as the index retains 25,800 or 850 odd levels, I think we are very well positioned. See, I think the clear point is that the index will definitely, cross 26,200 convincingly. But I think for that, you need a big sentimental booster like a trade deal or typically some sort of, easing of supply from the primary market paper. And obviously a very strong corporate earnings growth for December. So probably, the markets may not cross 26,200 immediately. They may hover around that level for some time. But I think post December numbers, maybe the second or third week of January, the market should also start discounting the pre-budget expectation, which this time my sense is we could expect a very big positive surprise. A lot of action could now happen in the winter session. I've been hearing reports that the government is likely to push many important bills. And that also is going to be a clear trigger point for the markets going forward.
All right. And talk to us about what markets are pricing is as far as Q2 GDP growth data, which is expected to be announced on Friday. What are markets pricing in? Because economists polled by various news agencies as well as independent analysis show that India is likely to see a robust number on its Q2 GDP growth print as well. So next week, is there likely to be better momentum on markets, keeping aside all other geopolitical issues related to the trade deal with the US?
No, I think GDP numbers could be attractive. I think I've been reading numbers that the number could be anywhere between 6.5 to 6.6%. And I think clearly, what kind of commentary comes after that is also equally important. But I think the number should be pretty robust. And I think that should definitely, give a very good sentimentally boost up back to the markets.
All right. And the immediate next sort of domestic event that investors would be eyeing would be the RBI's MPC in December. A likelihood of, since inflation has been very, very low and overall the government would want the capex investment cycle to kick in. I think the view on the street would be that RBI would go ahead and make that 25 basis point cut. If that were to happen, good news awaited for the BFSI sector?
Yeah, definitely. In fact, Karthik, a recent interview of RBI governor has clearly said that he's in favor of rate cuts going forward. And I think, with the retail inflation number, which was released recently, showing a very record low, that clearly shows that there is some area and some scope for a rate cut going ahead. So I think the market should definitely cheer this, although some part of it has already been, discounted in the markets. My sense, even a 25 basis point cut comes, it should be beneficial for the NBFCs, for the banks, for the housing finance companies, and that definitely is a boost up factor for the market, because whenever interest rates cuts are done, I think that's a big boost up to the earnings growth for most of the companies.
All right. I also want to spend a minute understanding from you the block deal of 7,100 crore rupees for Airtel by Indian Continent Investment. What does this mean for investors already invested in Airtel? Because the stock is slipping about 2%, in fact, more than 2% or so in trade right now, Bharti Airtel.
No, I think Karthik, these kind of block deals are not going to upset the long-term growth trajectory of Bharti Airtel. I think these things happen with every block deal. Today you may find the stock a little bit under pressure, but once by the end of the day we come to know who are the new buyers and which are the institutions which have taken this stock, I think you'll probably see a little bit of corrective action, maybe not today but tomorrow. My sense is that the company should do exceedingly well in the second half, considering the fact that now ARPUs have stabilized, the 5G rollout has happened, and I think Bharti is a very strong now player in the telecom market. So I think net nothing to worry in the short term. I think longer term, I think the growth trajectory for Bharti Airtel will continue.
All right. I also want to talk about auto stocks because you had mentioned, Avinash, at the start of our conversation that you're more bullish on Q3 numbers than potentially Q2 numbers, and the earnings of Q3 is something which could pretty much define the mood of the market for the medium term or so. I want to talk about the auto sector specifically because auto sector has obviously seen a massive fillip with the GST rate cut. And then yesterday, of course, we saw the launch of Tata Sierra and Tata Motors stock this morning. The passenger vehicle stock is up about 2.6% or so. So while competition intensifies in the auto space, great numbers likely to come out in Q3. What is your medium to long-term view for investors who would want to potentially invest in auto stocks?
So I think clearly the passenger car sector and then the utility vehicle sector, and of course even the two-wheeler sectors are definitely going to show a very strong positive volume growth. If you look at two-wheeler companies, we have been very positive on stocks like Hero Motor. I think volume numbers have increased significantly. Plus they have a very large rural India base, so that puts them in a much better position. As far as the utility vehicle market is concerned, we continue to like M&M. Even at these levels, our sense is that not only is the company a market leader in UVs, the tractor market is also now shaping up very well. The electric vehicle product portfolio has been also doing well. So I think M&M should also positively surprise the markets, because in terms of their balance sheet, capital allocation, and the kind of positioning they have done, I think M&M definitely also suits. As far as Tata Motors is concerned, I think they had a cyber attack in JLR, and that affected their passenger car business. But I think clearly, if you look at the next 1 or 2 quarters, Tata Motors also has come down to reasonably attractive levels. So I think somebody who's got a slightly higher risk appetite and a slightly higher time frame can even think of nimbling into Tata Motors. Our sense is over the next 12 to 15 months, you could see a good outperformance in all the automobile stocks.
All right, and closely linked to the auto sector is also the energy sector. The demand for fuel, which is never likely to ebb out despite the sort of penetration of EV. So I'm looking at the energy stocks this morning, and great momentum seen. Reliance is up about half a percentage point. Coal India, BPCL, HPCL, all up more than 1% or so in trade. Now, what seems to be the trigger here? Is it the fact that that we have in any case decided not to go ahead and buy any more Russian crude, or is there something else? Is it just demand supply?
So I think, Karthik, there have been some reports that very soon Russia-Ukraine war could end, and that could possibly put a lot of supply of oil in the market already. And I think most of the oil marketing companies, their profitability is dependent on crude oil prices. So I think my sense is that stocks like BPCL, HPCL, IOC could benefit, because if crude prices come off, and I think even if they don't buy from Russia, the overall crude prices soften, that is definitely going to improve their GRM. So I think instead of the upstream companies, we are more positive on the downstream oil marketing companies. And I think IOC, HPCL could definitely fit the bill. We really don't know whether this news is genuine or not, but yesterday there were strong reports that Ukraine and Russia have decided to end the war very soon. And if that happens, that's going to definitely mean that the oil market is going to be very, very, comfortable, and that itself is going to be a near-term trigger, for these oil marketing companies.
All right, Avinash Gorakshakar, we leave it at that. Thank you so much for your time this morning. Meanwhile, Nifty 50 has crossed that psychological 26,000 levels this morning. Let's see how much of an upside is left, especially as Avinash mentioned in the second half of the trading day. But for now, Avinash, thank you so much for your time.